Next up, we have another fireside chat. Please help me welcome John Griffith, Chief Development Officer of Gold Royalty Corp. Hi, John.
Good to see you.
Great to see you. Please sit. Okay. Well, thank you for joining us today.
Oh, well, thank you very much. It's a great pleasure to be here, and thank you to the organizers and sponsors of the conference. It's a young conference, but each year it gets bigger and better, so great to be here.
Absolutely. So for the audience with us today, who may not be familiar, can you give us an overview of Gold Royalty, the portfolio, and the company's strategy?
Absolutely. Gold Royalty is one of the younger royalty and streaming companies. We went public in March of 2021 with 18 royalties on longer dated assets. We had a very successful IPO, raised 90 million in a twice upsized offering, and very quickly went to work to grow the portfolio. Today, we've grown that 18 royalty portfolio into a portfolio of over 240 royalties. And that places us in the top 5 globally, even among the large caps, Franco, Wheaton, and Royal, just in terms of the number of assets. We're at a key inflection point in our evolution. Those 18 royalties, as I mentioned, were long dated, none of them cash flowing. 2025, we will be free cash flow positive. Our guidance was 5,700 to 7,000 GEOs. And 5 years out, we will have more than 30,000 GEOs from that portfolio of assets. So it's been a tremendous evolution of a young and rapidly growing royalty and streaming company.
How exciting. And yeah, in terms of growth track record, you guys have been unmatched. And as part of your recent growth, you guys added a couple of assets somewhat recently to your portfolio, including both Vareš, which is a copper stream, as well as Borborema.
Yes.
Can you talk a little bit about those two assets, the rationale, as well as the strategy behind those transactions?
That's a great question, because both of those acquisitions have been very meaningful to us in terms of our growth, and in particular near-term cash flow growth, but had very different strategies. And I'll start with Borborema. It's an asset that is being developed by Aura Minerals. They have a tremendous track record of building projects in Brazil. Borborema is the latest of those projects. It's already started production. It'll be ramping up and meet technical completion in the second quarter. I think what's really interesting about that is we provided effectively part of the project financing for the development of the asset, together with a senior secured facility. We provided $31 million. It was a structured transaction, given the potential for unlocking additional resources that are currently constrained by a highway which will be moved. So that was a very exciting transaction for us. A lot of upside and a lot of exposure to a more than 2 million ounce asset for Gold Royalty. In contrast, Vareš was an existing stream that we purchased from Orion Mining Finance. The opportunity there was really presented after Orion had ran a process for multiple assets, none of which fitted in a portfolio context. And Orion quickly saw that and was willing to engage on a bilateral basis for select assets. We negotiated a transaction that in this particular instance, acquiring a third-party asset gave us access to site visits and due diligence, but effectively buying into a multi-decade silver producer. Once fully ramped up, the Vareš mine will be among the 10th largest silver mines Obviously, copper being non-core to a silver producer made a lot of sense to stream the copper as a basis upon which to raise cost-effective capital. So those two assets will be big contributors to that growth profile that I was talking about.
Nice. And also within your portfolio, you guys own a royalty on Cote, a 0.75% NSR royalty. Now, with the recent Franco transaction where they paid over $1 billion US for a 7.5% gross margin royalty, that is a great read-through for your royalty on the asset as well. Can you tell us a little bit about that and why Cote is such an appealing asset?
Yes, absolutely. We're very fortunate to have royalties on 3 of the 5 largest gold mines in North America, one of which is Cote, the other 2 being the expansion of Canadian Malarctic in the Odyssey Underground project operated by Agnico, and the third being the northern extension of Goldstrike operated by Nevada Gold Mines and the Ren project. So coming back to Cote, we were very fortunate to be able to engage with the estate of a deceased prospect a couple of years ago and pick up a 0.75% NSR. It doesn't cover the full resource. It covers the southern portion of the Cote pit, but fortunately for us, it's the high-grade near-surface material, which is going to give us a very accelerated return. It's a tremendous asset. I think IAMGOLD's done a tremendous job developing Cote, and I think you're absolutely right that I think the validation and vindication of all that hard work is testament to what Franco was willing to deploy in terms of investing exposure into an asset like Cote Lake. And I think it's going to be, again, a multi-decade gold producer operated by one of the seasoned, well-respected gold mining companies. So again, speaks to quality of the type of asset we've gone after and been very fortunate to secure within our portfolio. And again, we're really super excited by this cash flow inflection point that's going to be driven, as you mentioned, by Cote, by Borborema, and by Vares, as each of those 3 assets ramps up during 2025, and by 2026 are expected to be in full production.
Very exciting, and quite a pivotal year for you guys.
Yes.
And I guess with the free cash flow generation that's about to come and are being realized this year, how do you see the M&A market within the stream and royalty space? Where do you see opportunities, and where are the best opportunities for you guys to deploy capital?
It's an interesting thing. I've covered the industry either directly working in it as I am now or as a banker, and I'll defy my age and say that I was covering Franco-Nevada when it was the only publicly listed royalty and streaming company, and today the market cap then was, I think, $1 billion. Today, the market cap of the industry is over $90 billion. The deal flow averages between $3 and $5 billion per annum. So there's certainly plenty of capital being deployed. I think the most important thing is it's very challenging for many single asset or exploration and development companies to raise capital. So royalty and streaming has become a very important part of that capital providing, sourcing for the industry. And I think with that backdrop, it should be no surprise that we're looking at a transaction approximately every 3 days. So if we go back, we're 4 years old, we've looked at well over 400 transactions, and we've offered capital or put in bids on approximately 10% of those transactions. And if you actually distill that down further, we've only done 10 deals to take our portfolio to the size that it is. So it's an industry in which you have to continually be evaluating opportunities. We have no shortage of scope to grow from that point of view. But I think now that we've gotten to the point where we've built the portfolio we have, we've got this inflection of cash flow growth, rapid cash flow growth, which is peer leading. We can be a little more discerning about the returns that we want to achieve. We can certainly be thoughtful about the geopolitical risk that we want to take and adopt in our portfolio. Right now, more than 85% of our net asset value resides in Canada and the US. So we have a very low geopolitical risk footprint, but that does allow us to think about stepping outside of those regions, and we do see opportunities across the globe. The nature of the opportunities we're seeing range from small exploration royalty packages all the way up to one of the most recent transactions that was announced by Franco, as you referenced, buying the royalty on Côté. And we look at everything. It's important to stay current. It is important to keep our team active, and we've built up a tremendous database of the assets we've looked at, and we do go back and we look at things again because circumstances change, owners change, resources are updated, and there's a lot of things that create enough reason for us to want to keep a very robust database of opportunities that we're able to revisit. But again, no shortage of growth. But right now, I think the key focus for Gold Royalty is discipline. I think we've, as I said, inherent in our portfolio today, have organic growth that is peer leading, and anything that we do has to be additive to that.
Right. And then looking at the stream and royalty sector more holistically, how do you guys think about valuation of Gold Royalty as well as the relative valuation, particularly taking into account the nature of the industry where you have the big three and then you have a couple of the larger intermediate players and then the larger juniors and smaller juniors?
Yes. Well, I think there are a number of dynamics that drive valuation in our sector. And I think if you start off just looking at the scale of the smaller companies and our valuation metrics versus the scale of the larger, the big three, if you will, typically, because the industry is well diversified, because royalty and streaming companies have no exposure to operating costs, no exposure to capital costs, because typically you gain exposure to any exploration potential, because you also have exposure to expansion potential, all of that translates into a much higher multiple than you would see in the operating sector. And so, that scale increases, the multiple increases, the larger and more diversified the company. And certainly, we're experiencing that. We're seeing our multiple actually start to increase as the market becomes aware of the growth and the cash flow potential. If you just think about our portfolio for a moment, our guidance 5 years out is just north of 30,000 ounces at the midpoint. If you take the current gold price, or even just take a $3,000 gold price, that means roughly $90 million in revenue. Our G&A is $8 million, and it's going to stay at that level. All of that cash flow is going to drop to the bottom line. And you think about the power of that. So that multiple, we certainly expect to accrete over time as that growth is delivered. And we're going to have the luxury of choosing what to do with our cash flow, pay down debt, acquire additional assets, and start to think about shareholder distributions. So I think all of that will play into an accreting valuation multiple for Gold Royalty. So it's a great time to be buying the equity.
Okay, excellent. Well, hopefully we'll have some new shareholders from the audience.
I hope so.
Well, thank you very much for your time, John.
No, thank you.
Great to chat with you.
It was a great pleasure.